Hello, this is Ronnie. I'm sharing with you here a clip taken from a long video that I just finished to record for my subscribers. I think you will find the clip very interesting. Okay, we are coming to discuss the precious metals, and I'm starting with silver. So that's not exactly what I am used to do. Normally I start with gold. If I do that, then it means there must be some reason, and probably a good reason, for starting with silver. And the good reason is that, in my opinion, the structure, the overall structure, the biggest structure, if you like, once you move away from the 60 minutes and the 4-hour chart, etc., the biggest structure is a lot clearer in the case of silver. And that is why I want to emphasize working with silver first. Now, what I see here is a pretty clear case on the daily that this is a B that ended here. It's very important because it is making it, if you like, a lot easier for us to analyze what's unfolding here. And we're taking this as a 1-2. Otherwise, if it's not very clear, what could happen is that some of you might think, well, maybe this is a B. Do you see? What would you do? You would go, you'll take this as an A, you'll take all of that as a B, and then you would work out a CDE around here, or you might even argue that the B is not done. But I don't think it's likely. I think that it is really looking well proportioned, and it's looking absolutely right that we treat what happened here as a B. And that leaves us basically only one choice. The rundown that began from this spot, having not seen the market climbing back above 17.761, is leaving us with one path to follow, that is a C, and that is a C that is not complete. Okay, that is a C that is not complete. The selling pressure is overwhelming. You can see that clearly on the chart here. After such a huge destruction, where's the rally? There is no rally. There is a huge selling pressure. That's why there is no rally. The market is unable to rally. This is a classic sign of a market that is shell-shocked, a market that is marching in place, counting time until the next drop. And that's what we see here. You can see the overhead resistance, the very immediate first overhead resistance, is lying right here at 14.5, and it hasn't even attempted to climb above that. Do you see that? It's so clear. For so many days it was buried, absolutely buried under the overhead resistance here, and no serious attempt was made to climb back. Now, not until I see a serious attempt to climb above that will I change my mind. This is basically a part of a meltdown that I was talking about. Now, let's go and see if we can subdivide it in a way that can help us to project the next move, the next immediate move. Because the next move, in terms of the big picture, we know it's likely to be down. Now, here's the 60 minutes. There is another aspect in the case of silver that is not present in the case of gold. And that is the spike that we have seen here. In the case of gold, if you remember, we have an attempt, but it didn't take the previous high. And that causes quite a, it can raise quite a lot of issues. Here there are no issues. It's fairly clear. It's fairly clear. You had a 3, you had a 4, you had a perfect triangle, you had the spike, yes, this pop, and it came down. Well, what more do we want? We got a clear impulse wave that may have failed to produce what we were looking for, but we got that spike, and it terminated right here. This is super clear. It's very, very interesting. It's very, very important to understand that you have a clear final run, if you like, clear finale to this run that preceded here, and you start counting from here. So there is no ambiguity, and then we go down. The problem that we now face is starting around here. Why there is a problem? The problem is that we have, if you like, relatively easy life running down here with our subdivisions here. And for all intents and purposes, we can say, well, hey, look, we got a 1, 2, 3, 4, 5 up to here. That's great. This is our first leg. Now, what is this? That could be a second wave, yes, for sure. That could be a second wave. But since gold and silver almost always go together and they have very, very similar wave count, you will see when we come to discuss the chart of gold that it just doesn't work, and you have to consider the possibility that you have somewhere around here fourth wave. Now that's why I said we have a problem here, and we have to start taking into account the possibility that the third wave, yes, could have ended here. There is no problem with that, but the fourth wave did not end here. And the fourth wave may have ended here actually. What we are seeing now is a rundown fifth leg. That will be, if you like, perfectly aligning silver with gold, because in the case of gold that looks really to be the most likely wave count. But we have an issue here with the time scale, because if this is a fourth wave, it just doesn't look like it's sitting right with the second wave looking like that. And that's a problem that I, of course, cannot do anything about. The chart is right there, the price action is right there. All I can do is introduce alternatives and variations into the wave count. There is nothing in the world that I can do about what is given here on the chart. Okay, so it's either a 1, 2 right here, or we are now sliding into delivering the fifth, and that will terminate 1. Okay, and then what will happen? Let's go and see now the daily and try to put it in perspective. You see, if we now breaking down in a third wave, then it is likely to go into something like that, maybe worse. Okay, if it's going into the fifth leg, we are probably terminating just the first leg of that third wave. Important to remember that. Now, if you press me on this issue, I would suspect that we are going down now into the fifth leg, and that will terminate the first leg. It could be that it's terminating the rundown that began from here, and that is going to be accounted as a third wave on this scale, but we will see as it develops, because that will change a bit the situation here, because it means once it breaks through the floor here, it mustn't come back to touch this line at 14. But I would take the more conservative line to say that we're probably going to break into the fifth leg, and then the market will just hang around here in the same manner that it hanged around here for almost 3-4 weeks. It'll just go nowhere. It'll break down, and then we'll just hang around here under overhead resistance, mighty overhead resistance here, and probably just hold on around here, around 14, 13 and a half, 14, 14 and a quarter, etc. Okay, basically correcting before the next big drop will come. This is my preferred reading also, as it is aligned reasonably well with the forex market. It is aligned reasonably well with the euro US dollar, the euros, the Swiss, yes, the US dollar Swiss, etc. We have discussed this before, so that is my preferred reading at this point. Now here's gold, and in the case of gold, we are facing the same situation. We are looking at a very big picture here, and the issue of the B that was so clear when we discussed silver is not so clear here. I mean, yeah, we have a B. It didn't go above the previous level, so for all intents and purposes, this is an OK triangle right here. Do you see, with the apex right here? That's our A, that's our B, and yes, we can work with a 1, 2. But some of you might say, hey, you know, I think actually the B ended here. And what you're doing, you're starting the C right now. The C didn't start here. And in the case of gold, I would imagine this is an argument that you have to really pay attention to. It might work. It might work. Of course, it's going to change quite a lot of things, but that's why I prefer to work with silver first. So that is my preferred reading in the case of gold. That is 1, that is 2, with a failure here, as we discussed before, and that's the rundown, and we're going now in the fifth leg. Now let me show you here the 60 minutes and why the gold is screaming fourth wave here. As you can see, a near perfection in the way we have here fourth wave drawn by Mr. Market. Near perfection. There is absolutely nothing in the world we can say this is a fourth wave, and again the issue comes up again with the time scale, that this is taking this as a 1, 2, 1, 2, 3, 4, 5, 3, 4. immediately you point the finger and you say, hey, have a look. That's your fourth wave and that's your second wave. But as I told you, there is nothing in the world that I can do about it. I'm going with a fourth wave. I think we are now sliding into that fifth leg, and things are going to become super interesting in the next several weeks. The E ended here. To the best of my knowledge, the E ended here. Okay, that's the E of that triangle. We are on a 5 minutes chart. That is my 1-2. That's the break out of that triangle. That's the first line. It's a 1-2, and we are now sliding in the third wave. Could have ended here, or it's going to end with a tiny drop under 1052. But in short, the fifth leg is not done. There is a scope for discussing the end of the fifth leg if it gives us that. Okay, if it runs back to 1067, then we can start talking about possible failure if it doesn't go lower. Okay, and all that. That is the first line of attention. Yes, you must focus on this. Is 1067 or so. It runs above this level. The 5 legs could be in, and that would basically mean that gold, I'm back to the daily, gold will simply correct. So my preferred reading that this will be 1, and then once it jumps back above 1067, yes, 1067, it tells you the 5 legs are done, and we're going for that second wave correction. The second wave correction, again, I could see jumping back towards 1080, maybe even as high as 1100, so 1110. I don't think it's going to go much higher than that. There is quite a lot of resistance here. The breakdown has been massive, unable to correct, to rally here, basically looking very, very weak. So I don't think it's going to come back to much more than this level. Now pay attention. All this is very nice what I've just told you, but suppose the market has something else in mind, which is always possible. Yeah, it just breaks down. It goes nuts. It breaks down by $50, $100. Obviously we will have to revise the wave count, but don't forget that we would still be within that big third wave down. I'm looking at the weekly. You see, in the nature of things, the weekly is showing us the extent of the possible slide here. So any sharp breakdown here will call for a revision, but not a revision of the fact that this is part of a third wave. So that's what I would say at this point. Long term, please still pay attention to these 3 levels. Okay, 3 levels that are marked as a possible end and a major support for gold. And you can see that we are coming close to basically crack the first one. It's right here. Okay, it's right here. Once we break through that level, we are setting up the next target. The next level, which would be just under 900. Right here at 849, if you remember 850 area. Okay, once we crack through the brown line, the next level is the level we are going to watch as a possible end to this slide. Just in case you would like to have further information or to learn more about my website, I thought of introducing very briefly my website here. That is the front page, and if you scroll down you will see there are quite a few examples of recent clips that I added. I also have a lot of charts here. If you're interested, there are a lot of charts that you can study, examples of past market action. There are also more charts here under resources at the chart galleries. You have chart galore number 1, number 2, plenty of charts. You've got useful links, recommended reading list, okay, terms of use, private policy. You can get in touch with me if you have any issue, any question whatsoever. Here there is a description of the services, okay, and in fact this you will see once you log in. It will let you see what you subscribe to, okay. So if you subscribe to the Wave Mastery daily service video, you'll get that. If you subscribe to the weekend service, you'll get that. But before subscribing, you might want to actually take a look at a trial. Okay, so you can actually have a trial of the daily video service, the full service. You click right here, and it takes you to the page of the The trial, it's 7 calendar days. It only costs €2.99. Okay, €2.99. You can pay with PayPal. It gives you access to the archive. You can also get in touch with me if you have specific questions. I will do my best to answer that. That is the daily service trial, and that's the daily service, the full scale. Then we have the Wave Mastery weekend video service trial. This is also priced at only $2.99. It gives you 12 calendar days. You get 2 long videos with that, okay, fresh videos, and you get access to the archive. And again, you can get in touch with me if you have any questions. That is the issue of the trial. Here on the main page you have some articles that you might want to have a look at, and that's the very brief introduction of my website. Hope you enjoyed the clip. Hope to see you on my website. Don't hesitate to get in touch with me. Wishing you successful trading. Bye now.